So we've crossed over into the afternoon time in the East Coast, which means we're now about to have our roundtable discussion featuring Blue Chip, Chart Trader, Event Trader, and Scalp Trader. I'm going to welcome all of you gentlemen in.
Hey, how's it going, Jim?
It's going okay. So in the process of our little discussion here, most of the questions that I have are more so for the group. If they are directed specifically to one of you guys, I'll indicate that so you guys know. But if what I wanted to have happen is if one of these questions resonates with you in particular, then feel free to jump right in, and then we can have the discussion and bounce ideas off each other from that. Does that work for you guys?
Sounds good to me.
All right, good.
Yep.
All right, so the first question comes in, and I think it's a good one to just get rolling. Somebody asks, coming off of these December lows, is this the mother of all sucker rallies?
I guess I'll jump in on it then. I don't think it's a sucker rally at all. But we've been talking about it. I've been talking a lot about how I see 2019 as being choppy, and that's simply we just got a lot of unknowns. We were talking about the Brexit yesterday a little bit, and then today we just kind of see the unlikelihood now that Xi and Trump are going to meet. So this is a fluid situation on a couple of different fronts here. We've certainly got weakness in Europe and China. So I don't think that this is going to be a sucker rally. I'm not expecting at the moment for us to go back and retest those December 24 lows, but I wasn't looking for a complete V-shaped rally back to the highs we were seeing back in October at all or anything just yet, just because there's still a bunch of headwinds that the deck needs to be cleared. Semiconductor space will be a key one because we've heard a lot about temporary weakness in Q1 that's going to shape itself out in the second half, but until we start seeing signs on that, I think it's going to be tough for people to get too far out in front of their skis. So I'm just looking at this as more of a choppy action, a little bit of a pullback, rather than getting ready to have that entire move off the December 24 lows erased.
Chart, I think you brought up a pretty good point based on some of the sentiment readings that you're seeing that would indicate that this is not necessarily any type of sucker rally at all.
I think that there was an enormous shakeout that happened in December, and it was a market cleansing move. But I think that it displaced a lot of money out of the market, and that money's trying to get back in right now. And I think we kind of cascaded down. I have a kind of mantra, which is that there's a difference between weak hands and strong hands. Weak hands are people who will get out when a position goes against them pretty much at all. Strong hands see a position going against them as a better opportunity. But a real cleansing market move like we saw in December is when strong hands turn into weak hands. And that doesn't happen very often in the market when you're talking about major institutions, big holders, like dominant holders of individual equities and across the market. And we saw that in December, and that's why it got so bloody. So the problem there is if you suddenly don't get recessionary conditions starting to creep in, if you suddenly see back-to-back great jobs reports, and at the same time, we get this really unconventional Federal Reserve policy situation that Gavin and I have called like kind of have your cake and eat it too situation, where they're going to come out and say the economy is really strong and they're not raising rates. So you get all of that together, and suddenly all these people who were strong holders of the market and who got busted out of the market in December, they're working really hard to try to reestablish exposure. So the severity and sharpness of this bounce is just that competition coming in on every little downtick by people who don't want to chase breakouts, but they need to rebuild portfolios. And you've got a lot of, as I said yesterday and the day before, you've got a lot of these groups are really kind of volatility constrained investors, like risk parity funds, variable annuities, some quant funds. The retail investors have been really thrown out of this market, and long-short hedge funds, according to a lot of the data I looked at, have been really kicked out of this market and didn't chase it on the way up. And now they're in a situation where they need to buy it. So the super V-shaped look is because of that dynamic, that there was kind of an error about are we heading right into recession. But at the same time, global bond market is now in a situation where we've got an all-time record for how much sovereign debt around the world is in negative yielding territory right now in terms of dollar value. And that could be the bond market starting to say that we're going to see more downward economic revisions. If we start to get that, all of this could reverse, because a lot of these people who got left behind and left out of this market, they're suddenly going to stop chasing it. And you've got a bunch of people who didn't get shaken out in December and who want out. So you could get, I don't think we're going to see an entire reversal. I agree with Gavin's picture. I think we've talked about it, that we're looking for kind of more of a range-bound period through the middle of the year as we try to figure out where things are headed. But there is the opportunity for more volatility. But until we start to see that economic downgrade, then you've got a situation where there's a lot of people who've been shaken out and are trying to rebuild. So that's my take on that.
All right. You did mention, you did comment about Fed policy, and we had a question regarding that. And this is the listener interpretation here, saying this rally seems yet again to be Fed-induced. Is there anything that you feel would be a catalyst for a sell-off? Will there ever be a day of reckoning, or will the powers that be that control the hamster wheel forever keep it contained? If they don't, will it be the end of the world?
Yes, so I mean, I think that kind of goes back to the same thing. And if you've got a situation where the Fed's already on hold, that means that bad isn't good. We're not going to go straight to QE. So it's really about, do we start to see downgrade in economic data? It's really pretty face value for the first time in a long time. I think the market is really face value right now. If we start to see the economic picture deteriorate, you're going to see this market suffer some weakness, because we've already put the Fed on hold. So that catalyst isn't there. Weak economic data otherwise would have been taken away rate hikes. So I think it really does come down to a very face value relationship between the market and the world.
Yeah, and Brett, to it on that, the EU economic forecasts, I think, have definitely been a heavy weight on that, because that's starting to see signs of a weaker 2019 outlook that perhaps people are a little bit more concerned about.
Yeah, totally agree.
All right, so just so everybody knows, our traders are still posting trades onto the in-play page for everybody. I'll do a couple quick house cleaning items here. UWT, Commodity Trader, added another unit to this one. So Commodity Trader adding to UWT, and Scalp Trader and Blue Chip looks like they took, Scalp Trader took some profit and Blue Chip got out of his Facebook. You guys are free to comment on these ones as you see fit.
For my Facebook, I mean, we got swing long this one last week on that post-earnings support gap level off the 165 area. We caught the nice little run up to about 172 for about 4 or 5 point gain, and now here we are with the a lot of price action reversing on the charts here today, and I'm just salvaging what I can on the remaining balance, so out on that one.
I'll comment on the Chrome CRON. I'm short the CRON and an SQ. Just looking for an early bounce in the market followed by rollover. So I'm trying to just be patient. Excuse me. Trying to patiently scale and short these names. I actually thought that on that initial half that I was putting on both of these names, I was kind of right on target in terms of kind of picking a top intra morning on these particular stocks. But it kind of goes back to that point that I also always make is kind of that scaling in approach. I mean, I think it's really important to scale into a position, at least for me, because even when I'm really confident that I've picked the right price, a lot of times it goes against me. And so instead of getting stopped out because I've gone in 100% all at one price, get an opportunity to add a second piece or a third piece at a better price, get a better average. And so with the CRON, I'm starting to trim. I mean, already like just this trade, it's 1.5 times size. I mean, this trade alone has made my day already. SQ has done pretty well also. But that scale-in approach, to me, it really helps me quite a bit.
All right, this next one goes out the chart. Any plans to take a bigger picture swing trade with looser stops than a fraction of a percentage? What would it take to get out of scalp mode and go for a 3 to 5% move in indexes?
I would say when the technical picture matches up with the sentiment picture in a skew. So right now we have a big cross-up. We've got, by and large, amazing as it is, given how much we've run, sentiment data, direct sentiment data, not breadth sentiment data, but direct sentiment data is still people kind of mentally fading this rally. You know, you could feel it this morning, right off the bat, people pounding the bid short, and then we get a squeeze. Even though the market needs to move lower, you still get that shakeout squeeze because there are so many traders just champing at the bit to short the market. So you've got this situation where you've got bearish sentiment, but you've got this overbought kind of situation technically in the market. So that's a cross-up. If you get, for instance, bearish sentiment when we were at the lows in December, the market was oversold and there was too much bearish sentiment. That's when it's lined up. Or when we started shorting the market back in early October, you had it lined up the other way. You had bullish sentiment and an overbought market. You have a technical situation that's in line with the same lean or skew. That's when I would want to take larger time frame trades. Or last February was a perfect example. We got the short VIX bubble imploded. We had we had like multi-decade extremes in bullish sentiment, and we had a market that was ripping higher out of the tax reform bill in January. Just January of last year was, you know, up until this January, probably one of the best in a few decades. We got to the end of that. We finally got all that bullish sentiment packed in, and then we got some short time frame signals that we were rolling over, and that was a great swing short for a lot of points. So it's basically, right now we've got a cross-up, and it puts me kind of stuck in a scalping mode. I'm trying to take advantage of things. I mean, I've got a swing on right now, as I see it, short crude oil. Commodity trader would probably disagree with me, but I'm looking for a move back under 51, probably tomorrow. And that's, you know, that's going to be a good 5%. So outside of equities, we're finding some examples like that, but equities are just crossed up right now.
All right, so the next couple of questions are going to revolve around shorting stocks, short interest, things like that. So I'll lead off with this one. How do you use short interest, average daily volume, and float to inform your trades, i.e. whether you'll even trade that stock or stay away from it? And if you trade it, how do those factors affect your stops and targets?
I can jump in on this one.
Sure.
You know, definitely high short interest, small float. It's kind of my ideal scenario. Typically means that there's quite a bit of volatility in the name. You tend to get these out of recent IPOs, and you know, the more they run, kind of the more short interest builds up. You get a lot of sentiment kind of driven activity in the names. So, I mean, I actually try to focus on stocks with smaller floats and higher short interest, especially stories that I feel are kind of misunderstood and recent IPOs.
Does it impact your targets and your stops? How do you base that? Is it a feel thing, or do you have some levels? How do you integrate those into your strategy?
You know, well, I really start to watch the short-term price action, so just kind of the average daily range. If there's a news event that may create an uptick in short-term volatility, you know, I factor that in. But again, for someone who's looking to scalp, I mean, as well as on the swing side, I mean, I like these names for swings as well, because, you know, again, if you get a name that's misunderstood, that has a small float, that has rising short interest, I mean, you can have a stock that goes up 200-300%, and people are shorting it all the way up. And I mean, there's so many, you know, examples of that. Restoration Hardware. What's the burger company that came out a few years ago? You guys remember the name of that one? I hate their burgers.
Shake Shack.
Yeah, Shake Shack. You know, I mean, there's just Roku, Canada Goose. I mean, there's just so many examples. I mean, you probably get 10 or 15 of these per year that come out as IPOs. People hate them, and you look 6 months down the line, they're up 100%, 200%, 300%. So just based on that type of price action, I'm drawn to those names. I mean, I'd rather be in something that has movement, that can rip several 100% versus something that's just going to plod and, you know, do nothing for 2-3 months, move 3% a week.
Anybody else have any thoughts on how they apply short interest to their overall trading strategy?
Yeah, I mean, for me, is we go through the earnings on a daily basis, and Scott and I joke about the ham and egger part of earnings season, which we get into now. And one of the top things that we try to do is highlight these low float, high short interest names with the idea that they could definitely move a little bit more. So I'm always looking for possible breakout areas. iRobot earlier today was a perfect example of one where where it was just kind of building up against that 92 area, and any hint of a decent quarter could rip this higher. Damon mentioned Restoration Hardware. That's one that tends to move big amounts during earnings reports. So I'm always looking for names like that have potentially volatile events that are bumping up against key resistance, because for me, it's a lot easier to play a squeeze in a name like that and try to drive it higher than it is to short. I hate shorting names, and I mean, we've even been talking about how tough the market as a whole is tough to short, because when you get a lot of people trying to lean on this, and Herbalife would be a perfect example. When there's too many eyeballs on a stock, that could really set those short crushers in action. And when you start getting up against key resistance levels, I like looking to play potential breakouts, because you can get an outsized move in the name if you're following it along that way.
All right, so this is a highly shorted name, and it's the ticker HEAR, Turtle Beach. And the question is, I understand the theory that shorts do more homework than longs. That's debatable, but and 50+% short interest in a name is scary. Headsets being a hardware, I understand that also, but shorting a stock with huge cash flows and continuing market share gains seems counterintuitive. Company continues to beat and raise, and shorts are not being punished. Any thoughts?
Well, my main thought is, why is the leading shareholder, the top shareholder, constantly selling into every uptick? And looking at the price action today, I would think there will probably be a filing coming out tomorrow morning showing that they sold more stock. And they're selling into lower highs as well. So that's the thing that makes me most nervous, is the people who are closest to the company are bailing out aggressively.
I would say also, how is that product differentiated over the long term? Does anybody have a view on that? I've always looked at that as just a fad. It's going to blow up and then blow down.
I agree 100% with that chart. You go to Amazon right now and you type in gaming headset, and you're going to see about 10 different brand names come up there, and Turtle Beach is not sponsoring one of them.
It's GoPro.
Yeah,
right?
Exactly. It's a one-trick pony. I agree.
I did get one feedback that says, could you help out with repeating the names of who is talking? I'll try to do that if it's directed to you guys, but maybe say Blue Chip here if you're going to jump in, so that they can recognize your voices. We do have new listeners and whatnot, so they may not know who exactly everybody is from just their tonal voice. So,
right.
All right.
Okay. Yeah, that was Chart Trader talking with Blue Chip just about.
And here's Blue Chip again. So my theory with short interest, they're great names to keep on the radar, but as I've stated before, if you ever listen to Gavin and I talk about earnings, and we talk about those names that have high short interest that are about set to report, you're never going to get a squeeze unless you actually have a catalyst. And that's why you see these short interest build in stocks consistently over time. And there's two things that can basically generate a catalyst. Would be a strong technical move. It could be an upgrade from an analyst, or a good research report, or clearance of some sort of significant resistance level, or whatever you want to call it, just the breaking of a downtrend or moving average. And then the other one would be something like a fundamental aspect, where a headline comes out from the company itself. It could be their earnings, it could be buyback, it could be anything. But it's going to be some sort of technical or fundamental catalyst that's going to take it above a resistance level and have shorts in the name scared, and they're going to have to start covering on this headline or on this move significantly higher. Something like Turtle Beach, the shorts are winning, and that's the thing with high short interest. Usually, for the most part, shorts are typically winning just by looking at the trend of the chart. Something like Turtle Beach, I look at it right now, it's got pretty obvious resistance right at the $18 level. If you look back over the last 5 months or so, 18 was support in September, October. It became resistance in December and January, and here again in February, and it's below the 200-day moving averages. So until this stock gets back above 18, you're not going to really get that generation of short squeezing panic covering, in my opinion. Now, I don't know when earnings are coming out for this name, but that could be the potential game changer in the name, if you like it, for the long haul. Potentially you have that happening. Something like Match, MTCH. This also was a low float, high short interest name that Gavin and I highlighted yesterday. And in this case, you can see the shorts have really been suffering. And that's another thing you have to take into account, too, as well. Short interest data, usually when you get it on the site, in my experience, it's always been delayed data. So you kind of have to take it with a grain of salt. So you can't just sit there and say, oh, 50% of the float is short. If you look at a chart like Match and you see the run-up that this thing has made over the last month, there's good chance that there's been short covering going on there. But you still had a decent squeeze higher there. The shorts were being proven wrong again and again and again, over and over again.
All right, so speaking of shorts, Commodity Traders covering one of his, AGCO. He is covering another 1/3 of his short position here. That's good for better than $2.50 per share on this trade, leaving his stop at his entry point. All right, so the next one will be more macro related, and it was something that Chart Trader and I talked a little bit about yesterday, but maybe we can get all your thoughts as well. What will be the impact of a hard Brexit, assuming one would happen, on the U.S. markets?
So let me just lead off with this one, and then everybody can follow. But I thought about this. I saw the question come in, and I didn't have a position on this question until it just came in, and now I really feel pretty strongly that that's a buy. Because as you're getting close to that situation, the market's going to be discounting it. As we said yesterday, there's going to be a lot of hedges that come in front of that. There's already a lot of companies that have already adjusted to that risk. They've already decided that this is getting somewhat plausible. And the big thing that there's going to be another effect to this, and that is it's going to be a huge deterrence. So the next time we would normally be in a situation where suddenly we've got a Grexit problem or a Spexit problem or an Italexit problem, that's not going to happen again for much longer, because this is going to be basically like a head on the spike outside the village. And I think that is going to be a deterrence that's going to bind the Eurozone better together. And if you look it up, the UK economy is only 2% of the world economy. And after we've already gone through this process and companies have already started to adjust, probably we're not talking about that big of an impact even on this economy, which is such a small factor for the global economy. So really, it's a UK issue. We're probably going to see a lot of hedging in UK assets in front of something like that. So I think the actual announcement could possibly be a buy the news.
Any thoughts, Gavin?
No, Brett, you're saying on a hard Brexit.
Yeah, isn't that what it, on a no-deal exit? Yeah.
Yeah. I mean, I think that there would be a little bit more of a shakeout going forward. I don't think that we'd be seeing people just diving in and buying on the headline myself. Number one,
maybe we got a little delay, but basically, if you look back, I'm saying 6 months later, look back at where that looks on a chart.
Yeah, I mean, that would be the pain trade. I would agree. I wouldn't be touching any UK assets. I wouldn't be looking to buy any UK banks at all or anything along those lines. But, obviously you'd want to be following the pound. I just don't think that either side really wants to move forward with the no Brexit deal. So I think more than likely we'd see them kick the can down the road. That March 29th date's pretty arbitrary. So I think we would probably see some selling going on, certainly some more waiting going on in Europe. But then for them to kick that down the road, and then for the buyers to come in at that point. But I think that we would see a dip in selling, a bit of a sell-off on the initial headlines myself. So I guess me and Brett would disagree on that. But I do think that we could see a quick snapback like Brett's talking about. I just think that the initial couple of weeks going into it, the month of March could certainly be sloppy if we're starting to get some warnings going on too in Q1 about this being an issue, that we would see a lot of sentiment data selling off going into that. So it'll depend where we get to on March 29. I think that the selling going in is going to be hard enough on both sides that they're going to just look to kick the can down the road. So I don't think it's really going to be a headline that we're going to see, at least in 2019 myself.
So, Chart Trader, again, just to clarify, I agree with what you said, and I don't think we're disagreeing. I think that it's unlikely, but the question was really just let's suppose that there is a no-deal exit that is announced, it is confirmed, it's the real thing. That actually completely happens. And I'm not talking about UK assets, I'm talking about other markets, like the S&P. I think that it's going to look on the chart a bit like the Brexit vote did back in the middle of 2016.
Yeah, I agree with the Brexit vote analogy.
Yeah, Blue Chip here. So, again, I usually listen to these guys to give me all the information when it comes to, the global headlines and the economic data and fundamental data, and I just try to focus on the charts and the price action and take everything in context from there on out. I don't specify and dive too much into the hard details, and I sure as heck don't make any sort of bet on how the market's going to respond to a resolution of any sort of pending risk or pending news that's been out there and waiting for deadlines. So my theory on all this stuff and the way I approach it is I do believe that the market discounts everything and that you do have players in the market that are betting a certain way. So once a specific headline comes out and there's some sort of resolution of sorts, whether it's favorable or unfavorable, I will typically let the market just respond the way it is, and then it's usually a fade. And the reason I say that is because the market hates, I approach everything from a risk on or risk off perspective. And when there's an unknown risk and institutions or anybody who's running money, when they can't clarify their risk on a specific trade and it's just very difficult to pinpoint, they tend to back off of it, and that usually leads to a decline in price action. And then once that resolution is out and made public and price action, say, gaps further on a bad resolution, that's usually the opportunity that they can now sit there and go forward and say to themselves, all right, this is past us, let's move forward with this new assessment of risk that we can actually manage now. And then that's when you usually have price action going forward. And I think that's similar to what happened with the EWU, the United Kingdom, when the initial Brexit happened. Chart, you had a fantastic trade with the Mexican wall supposedly being built ahead of the election with the, what was that, the EWW, I think was the
peso. I was in the currency.
The peso, right. So the peso was just going down into the elections based upon Trump's wanting to build a wall, presidential speeches and whatnot, and then after he got elected, you dove right in there, and I think you made about a 50% gain on that. It was just a beautiful time trade. So it's the same type of scenario where I think you're looking for, I would never bet on anything ahead of time to guess that. It's like going into earnings ahead of time. It's always a wild card crapshoot to me, so I'm never going to take on that excessive risk unless I have some cushion. It's a binary trade. You never know if it's going to go up or down. So for me, once that comes out, that's where the opportunity lies, because now you can basically go forward and understand your risk for the trade. So again, I'm not paying much attention to the Brexit thing. I'm listening to these guys, but one of the things that are on my radar, I'm watching the EWU, which is the United Kingdom ETF. It's been under pressure for over a year now. It's bouncing back a little bit with the broader markets here in January. If this thing sells off post a resolution, I might look at it as a potential buying opportunity on weakness.
All right, so we had a question come in that's asking, where do you type in a question to participate in this Trader Audio? So I'm going to show you on the in-play page on the Trader Audio. There's a button over here that says Talk to Us. So if you can follow along with the cursor here, it's over here on the right-hand side. So I have a dual in-play page, so it's kind of in the middle. Let me just do it on a live in-play, and you'll see it probably a little better. It's over here on the right-hand corner. It says Talk to Us. Hopefully you can see that okay. But that is how you would do it, and we should get your question momentarily. So speaking of, we also had a question that asks, can I get Trend Tracker on to explain his thoughts on Turtle Beach HEAR, considering he got long this one and he's kind of opposite that the opinion of Damon and Scott. So bear with me so I can patch him through real quick.
Just the blue chip here. So I'm not necessarily against Turtle Beach. I would just say that it needs a catalyst. So I'm just not one to participate. I even saw that he took a small position size. So he's obviously looking more at the fundamentals. He'll come on here in a second. Obviously, I think the earnings, they raised guidance and whatnot. So he'll come on and explain that. But I think you need that catalyst technically for at least to get me involved with it. But I'm just killing dead air here until he comes on.
Yeah, I think he's on. Are you there, Craig?
Hey guys, I'm in.
All right, so special guest Trend Tracker making his yearly debut here today. We're going to talk a little bit about HEAR. So you probably didn't necessarily hear some of the things that we were talking about. The question was derived about this one being somewhat of a high short interest, and Damon had a good point regarding some of the action that he's seen from their largest shareholder, the fact that they seem to be selling every time the stock gets a little bit of a pop, and they had not the most they didn't have the kindest things to say about this one, but you went ahead and initiated a small position in this one, a swing long position. So why don't you give us your thoughts on the matter?
Can I do, before he starts,
Sure.
I just want to add the point that Blue Chip and I both expressed, which is how is the product over the long term differentiated from the market, and is that why maybe there's this sustained short interest and maybe some insider selling, because at some point it's going to be sort of a commodity product, and maybe that's wrong, but that's kind of where we came from.
Yeah. I don't necessarily disagree with any of that at all. I'm not, really planning to invest in this one in the long term. I realize it's definitely a contrarian call here. I realize that the stock is in a downtrend here, and the price action this morning obviously is just a continuation of that. It doesn't look like it's changing, at least for now. I'm essentially anticipating that I think the sentiment is overly bearish, and this downtrend is starting to smooth out. It's made a number of attempts, to get above the 50-day over the last 6 months. I mean, it's just been trending down along with the 50-day for a while. And, relative to the sentiment and the expectations for next year, I think that, we could see that break here soon. Obviously, Blue Chip would be interested in getting involved if it starts to break out of this downtrend. I am speculating that and anticipating that will happen sooner rather than later.
Hey Craig, when are earnings for this? Just so it gives me a heads up to start watching it.
Well, so they raised guidance this morning, and they said that they would officially report their Q4 numbers in mid-March.
I thought I saw March 5 for what it's worth, Craig. I thought there was a headline out a little bit ago.
Okay. Well, the press release this morning said mid-March. I don't know if...
Yeah. I think, Craig, you should also...
Or maybe somebody wrote in a feedback on it. I think maybe that might have been it.
And then, Craig, you should also preface, too, just your style and approach to trading.
Yeah, exactly. And that's what I meant. So obviously I'm looking at things a lot differently from you, Scott, Blue Chip.
Right.
I am a fundamentally based, more swing trader, investor type. And so, I'm not, I totally agree that the technical picture still looks very ugly. I am speculating, taking a contrarian position here, that this selling is overdone at this point, and it's kind of stabilized in this mid-teens range. If you look at like the weekly, it's found some support. The stock's trading at like 5 times earnings now. Why is it trading at such a cheap valuation? Because yes, the market anticipates that this is not sustainable. They're not going to grow. They grew at a ridiculous rate in 2018, and obviously that's not sustainable. Right now, the market the consensus is for revenue and earnings to fall next year, where I think that the 2019 outlook, just like every update that they've had over the last 4 or 5 quarters, has surprised to the upside. I think that in mid-March, when they do guide for next year, that could cause a capitulation in this short interest that has been building for a year now.
Right. So, yeah, nice, Craig. So just to give you full credit here, I think you're a fantastic analyst. And what I do, I typically type in trend each weekend, and I go through your commentary and your posts to see what names you've been diving into and doing a lot of research on. And then I set alerts for key technical levels, because I'm more of that momentum breakout swing trader type of play on these names. And your track record for finding gems is just impeccable, between jumping on board Goose and Match, and I think you're one of the first people I knew buying Tesla down there $40 a couple years back. Sienna was a real good one you had recently. I mean, so yeah, I'm not trying to dismiss your.
I'm
not dismissing your entry level or anything like that. It's just different styles, different strokes. But I definitely keep track of all your proven research that's just been amazing on getting in on stocks super early. So.
No, I really appreciate that.
Yeah, I would agree with that as well.
Me too.
Craig is excellent at finding these types of ideas. Just with respect to here, I mean, I guess, a little more color from my perspective. I mean, I wouldn't be surprised to see this actually higher at some point. But what I would like to see is actually a down quarter where they actually disappoint. The stocks gets crushed. And then I think it's potentially viable, because then you have the shorts starting to cover, because there's really no more catalyst, right? Each quarter, each quarter for the past 4 quarters, they come out, they pre-announce, they raise guidance dramatically, then they beat that guidance, and the stock still really can't do anything. So I think once they actually can have bad numbers, the stock gets hit, I'm actually probably a buyer that day, and hopefully it'll be closer to my perspective, like around 10 or 11. I think the valuation is really intriguing here. I think it makes for an interesting takeover candidate, just given this thing trades at like one-time sells. There's some bigger players out there in the market, like Plantronics, that I think it would make sense for someone like that trades at a higher multiple to potentially buy them.
Totally.
And just the name brand. I mean, Turtle Beach, is a strong brand name within this whole gaming community. So I know when, I was kind of doing some initial research on this space, I asked my son to ask all of his friends, which gaming headset to buy. And I'd say 80% came back Turtle Beach. So it's definitely popular, among kids. Even though there are bunch of different names out there. These guys have, I think, 48% market share. They're bundled with, a lot of the actual consoles. I think they kind of do like the OEM type of thing with some of the console makers. So they have a dominant position. I think I've heard someone kind of call them the Beats of the Beats headsets of gaming. So it's definitely one that I think is intriguing. It's just amazing to me just how aggressively this holder is selling stock, though. That's never a good sign. And once that holder gets flushed out, and I think if this thing goes lower, because they keep selling, every time it goes up they sell, when it pulls back they sell. They're just constant on the offer here. So personally, I like to see it low teens, and actually wouldn't surprise me to see this thing in the 20s later this year or sometime next year.
Hey, Damon, so when it comes to insider selling, are they usually typically advised by other people, you think, or do you think they make a lot of these decisions by themselves? Because if you think about it, this stock was nothing over a year ago, and it rallied all the way up to 35 for like 1,000%, and then it's just corrected more than that. and maybe he's being advised to sell it, especially if he's a younger CEO of sorts.
Well,
right?
no, this is a fund. So like there's
it's a fund. Okay.
Yeah.
All right.
SGVTB Holdings, and I think the history there is that they financed a convertible with Turtle Beach, maybe early 2018 or in 2017 when the company was still on the ropes. I mean, I think they were possibly still losing money. Business was really struggling. They still had debt, and the company did this convertible that was then, converted into equity. And so they got a really good price on it, but I mean, they're blowing this stock out like crazy.
Yeah. So that's what I, had kind of assumed. I've been meaning to look into it a little bit, but they got in, like you said, when the company was almost, left for dead. So they are, if my cost was 50 cents or whatever, then I'd be taking profits too.
I think it's more in the $3-4. I think it's. Don't quote me on this, but I think it's more in the $3 to $4 range, which is still a nice upside, definitely. But.
Yeah, but so just I want to try and tie it together a little bit more. So my thinking is, what really set this company off is this new battle royale trend in gaming, and I'm not really a gamer, but that trend is clear. And I don't think that's necessarily going away anytime soon. And, on any given day, there's probably 1,000 guys that lose in whatever game and throw their headset against the wall, and then they need another $50 or $100 headset or whatever it is. As long as this battle royale trend in gaming persists, that's why I think the estimates going forward for 2019 are too low, and given the valuation, like you said, either a strategic buyer could come in, or I think it was Skull Candy that got taken private a few years ago. And again, that's not a good thesis to own a stock hoping that they get bought out, but I think eventually the fundamentals will tip the scale and the stock will break out of the downtrend. At least that's what I'm thinking.
Hey, Trend, so we're getting a lot of questions regarding you, so since we have you on and they're going to take advantage of this, so they want your view on TTD. This is another one that you were all over, and really I remember you buying this one they had a bad earnings, a big gap down, and you were continuing to buy. You still believed in the story, defending it many times, and you've reaped the rewards. So the listener would like your current views on TTD.
This is by far my largest position, and the risk reward at 150, 140 isn't like what it was 100 points ago when I was, pounding the table. I'm sure you guys remembered I was pounding the table on this one for months. I still really, really like it long term. I think any significant weakness is going to be a buying opportunity. They are going to report in 2 weeks from today, and they're also going to have some kind of investor meeting, analyst meeting in March. So, they're a leader in programmatic advertising. I really view them as what the advertising industry had been waiting for, which was some sort of disruption to the duopoly of Google and Facebook. All the biggest advertisers, or, all the biggest brands, so, McDonald's or Nike, whoever, they wanted a neutral place to programmatically target people on the internet, like you can on Facebook very successfully, or YouTube. So the Trade Desk is kind of the place where you can buy ads and target on the rest of the internet. So whether it's Roku or Hulu or any of these other really, really hot websites or apps or properties, the Trade Desk allows you to target people there. The stock has had a huge run, but the market cap is only $6 billion. If they can keep growing 40% plus in the coming years, which I believe they will be able to do, then this still could be a great place to invest in the company. Obviously, I can't see into the future, but it's by far my biggest position, so I continue to really like it. Yeah.
All right, and your current thought of LGF.A, that's Lionsgate.
This is one that hasn't worked out too well for me, but I still like it. There was a lot of consolidation in media, and so there still is a lot of value here, and the stock is cheap. I like it at this level. I would consider adding to it. It's trading about 10 times EBITDA, so it's attractively valued. This is one where a lot of the people would, a lot of the bullish theses on this stock revolve around consolidation in the media sector. This is one of the few independent, smaller production studios out there, and now with Disney's even more dominant position in the sector, everybody's scrambling to produce content on their own, so it's definitely an attractive asset, and I continue to like it.
All right, and before we let you off the hook, they want to know what are some of the other ideas that you're watching as buys here.
Hey, Craig, let me jump in on that quick. So in addition to that, I want to know, where do you get all your ideas from? Build on that one too. I mean, it seems like you're going after recently a lot of IPOs. So I'm curious to know if you keep track of the stock ideas or the next big thing columns that we have, or maybe even the emerging growth, which is these these smaller to mid-cap names that have really great fundamentals. So if you just dive into that as well, without giving away all the secret sauce, obviously.
No, I mean, as you know, Scott, I've been working here for over 10 years now, and this is just kind of what I do. Looking at news and earnings, I try to pick up on trends or the hot fundamental themes in the market. I have had a lot of success in some IPOs over the years, like Twilio, MDB, Goose, like you had mentioned. Some of them can be super easy. The problem is that, when they come public, if it's a really special business or asset, like a MongoDB or Twilio or Goose. But the problem is that all these really hot software IPOs now open for trade at 10, 15, even 20 times sales more recently. So it's not as easy to make money in the recent IPOs as it was 5 years ago, in my perspective. That's why TTD was the reason that was a great opportunity. If you looked at the numbers objectively, it would have looked like a great stock to invest in, but it was ad tech, and everyone just assumed, for good reason, that ad tech is getting killed by, if you're not Google or Facebook, then ad tech is a bad business. So they were just going to be the next ad tech stock to fail, like many have. But I think they actually are. They do have a chance to be successful long term. But yeah, I mean, just staring at the news flow and earnings every day, you pick up on trends, and I don't know. It's just kind of what I've always done.
Cool. Yeah, that's why I let you do the legwork for me, and I just keep watching that trend ticker in the archives every weekend. So appreciate it.
I mean, we should kind of work together more, because you, I've noticed that I put some stuff on your radar, but you're great at the entries and the exits. Where I'm better at identifying things that are worth owning, but I might not have the cleanest entries or exits. Mine are more patient, longer term, buy and hold.
It works. It all works. To each its own, Yeah, we'll be in touch.
But Trent, you didn't offer any new ideas. So what's up your sleeve for some new ones?
I still have among my positions. There's a number of holdings I have right now that I'm kind of down in, and I'm looking to average in more. I know biotech is kind of its own animal, and I could certainly understand not wanting to mess with biotech stocks because of the binary outcomes and the volatility. But one stock that I'm really liking here that I already own is AIMT. AIMT is the ticker. They are going to have their peanut allergy immunotherapy drug approved this year. If you look at it from a technical perspective, it went IPO and it went up big last year because they had this positive phase 3 data on this peanut allergy drug. It's a huge unmet need. The other two competitors that had peanut allergy drugs have kind of failed now at this point. So they're going to have the market to themselves. Nestle has a big piece of them, but their plan is to go it alone. But they're expected to get this drug approved. It seems like a foregone conclusion that the drug will get approved, I don't know, sometime mid-year. And then obviously they're going to have to execute and, they're going to have to do it, successfully launch it on their own. But I think just on approval alone, this thing is going to get back to 30 by mid-year. And if they can successfully launch the drug, it can turn into a momentum stock. Look at something like EXAS. It's pretty rare that a biotech company, well, I don't know if rare is the right word, but, biotech companies with potential blockbuster drugs, a lot of times they end up getting acquired because they end up needing a partner for marketing and all of that anyway. AIMT they even got a new CEO that specializes in commercialization. This thing, if all goes well, this thing could double from here, but I think back to 30 is a pretty safe bet right now. So that's one, AIMT. And what I really like about it is that it is a de-risk asset. Yes, it's on the FDA now, whether or not they want to approve it, which kind of sounds scary because who knows what they would do. But it's pretty much a foregone conclusion that they're going to get approval. They've done everything right. And yet the stock is kind of pulled back into support here in the mid-20s. So that's one of my favorite ideas right now.
While you're thinking about any other ones, there was a question that circles back about TTD, if you don't mind. And it's regarding, do you see a problem for TTD from the potential of increased privacy regulations affecting quote-unquote super cookies and similar browsing tracking technologies that TTD probably uses to target advertising?
That is a good question. So, GDPR was implemented in Europe, was it last year, May, I think it was, and that actually increased their position in Europe. It increased their lead in the ad tech space. They work with their clients, they work with the ad agencies, they work with big brands to kind of ensure because they're basically the experts on this kind of stuff. So it kind of increased the moat, and it actually helped their business in Europe since then. I think California is putting in some kind of data protection regulation. So now those kind of headlines will probably hit the stock in a knee-jerk fashion. But it's actually a good thing for them because they, unlike Facebook, they've been doing it the right way with privacy in mind from day one, which is part of the reason they have a number of competitive advantages. One of them is they've been doing it the right way from day one. There's no conflict of interest. Sorry, I won't get into all that stuff. But if anything, I think it will strengthen their position, make it even more difficult for other players to kind of get involved and do what they do better long term. So yeah, it's not a serious risk in my view.
All right, Trent, thank you so much for that input. Somebody asked what was that symbol you were talking about before that. AIMT was the symbol he was talking about, the biotech stock. All right, this goes out to anybody, and this will probably be our last question. But could anybody comment on how you think about headlines about a stock being taken over as a takeover target? It seems like most most have a quick spike and then retrace, but a few do take off. Do you ever trade them? Do you ever think about shorting the spike? What are your overall thoughts?
This is an event trader here. I mean, we've talked a lot about this in the past. I mean, I don't try to chase these ones. We try to highlight. You'll see them a lot of the times come in. I was kind of talking a little bit about with that high short interest, where it's a little bit more interesting to me when it's coming up to key levels of either resistance and support, and you'll see a lot of these headlines kind of come out. So for me, a lot of the times it's just momentum traders trying to force a breakout or bounce off a certain level, and that's why you usually see these reversed. Unless you happen to be in it. And think about it too. If you're in a name and all of a sudden it got that pop on it, there's a good chance that you might take advantage of that to take a little bit off the table. And I think that's what we see a lot of the times here. So for me, I don't like chasing that. There's definitely different levels of it, like where you'll see it coming from, say, a Wall Street Journal to as opposed to a hearing. The other thing that I throw on here too is Carl Icahn cannot buy every stock out there. So if you see like an activist buyer or something like that coming in, you'll get the same sort of action. But for me, I don't like chasing it. I usually just let the action play out and just kind of pay attention to the levels of where it's coming in at and see how the stock reacts on a retest of that level.
Yeah, so this is Trend Tracker again. Gavin, Event Trader, made some great points there, and I agree with everything that he said. I think it is important to kind of keep it, notice the nuance in the headline that we post, even if it is just through our normal in-play, not on the trader service. Like Gavin said, if it's like a hearing, or if there's the word like rumor or takeover chatter, a lot of the time, it does, it doesn't have much validity to it. A lot of times it does seem like these rumors are, generated in momentum stocks with either high short interest, or there's just people that are trapped in longs that are trying to like blow out of it. So, that's a lot different from if we report that Bloomberg or Reuters or the Wall Street Journal or somebody is reporting that there's actual talks. Actual reports of actual interest from whether or not be taken private or another company is looking to take them over. That's a big difference from, hearing blah, 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 takeover chatter. So that's definitely something to keep in mind. I don't get involved as much in the shorter term stuff, but I would argue that the devil is in the details a lot of the time. So if it is from a reputable source, we'll post the link to Wall Street Journal or Reuters or whoever, and every word in that report you kind of have to take very seriously, whether or not it's initial talks or imminent deal. It's all, the devil's always in the details, which is pretty much the case for everything that we do here. Stock by stock, event by event. It's all, the devil's always in the details. So I would be careful in general trying to trade that type of stuff. But
I'm curious, how accurate is Deal Reporter when they come out with something? I see a lot of things dubbed to Deal Reporter. And I'm just curious if you've ever seen anything that there's a higher probability that this one will go through or not.
You know what? That's a good question. I think they're pretty decent.
I usually find Reuters has the best track record from, just anecdotally speak myself, but Deal Reporter is definitely watched by a lot of eyeballs, so therefore you can get a little bit more bang for your buck, if you will, in terms of market reaction and volume putting in, just because, it's basically $50,000 a month for this service, so therefore it's given it a little bit more credibility. So from that front, but again, like Craig was talking about, if it's a Wall Street Journal story or Reuters or Bloomberg, that usually has a little bit more credibility than just a momentum trader throwing out a rumor here and there.
Yeah, and just so listeners know, a lot of times we'll highlight that there was a rumor about a particular stock that is rumored to get taken over. Oh, this one popped 3% based on this particular rumor, whatever. And we toss that out there, not necessarily for the trading idea, but more so you can take into context. If you're long this one and you get this pop and you're going to write in and say, what just happened? That's why we say it. And for the most part, from what we've seen, a lot of these tend to not play out. It's just a rumor, like we've talked about. A lot of times you'll see them on the option expiration days, or getting very close to the option expiration days, where they'll try to juice up the stock a little bit. And
low volume holidays too, like
yep.
The Friday after Thanksgiving is a huge day for people throwing out because they know that they can press the stock around a little bit more.
Yeah, so there's an opportunity there that if you saw a $3-4 pop that you weren't expecting, maybe it's a time to take some profit, and you could probably reload, and that's why we toss them out there. So I think that we do have some other questions, and I want to have you guys aware. I'll make sure that you guys know all these particular leftover questions that we have. We don't have a whole lot of them, and I apologize if we didn't get to some of them, but I will make sure that they see them, and we'll try to respond to everybody's question that did come in. I want to thank everyone for participating in this, and Trend Tracker, don't make yourself a stranger, buddy.
I won't.
We're gonna have to get you a segment now.
Okay.
So
I'm cool with that.
all right, well, that's the good news, and again, thanks guys for jumping in on this, and feel free to hit us up with any other additional or follow-up questions that you may have, and we will try to answer them as best we can. Thank you guys so much.
Thanks, Jim.
Thanks, Jim.
Thanks, Chip.